Kia ora, I'm Mary Jo, Kiwibank economist. Monthly house price growth has averaged a strong 2% since lockdown was lifted last year. And for many regions, house prices are now over 20% higher than they were a year ago. This rate of growth is simply unsustainable. And with a clear shortage of houses, an increasing number of people are shut out from the market. So policy decisions to fight the housing crisis are desperately needed. Now, in response, last week the government announced its latest suite of new measures to tackle the rampant housing market. And the most significant change was a decision to remove interest deductibility. Investors previously had the ability to reduce their tax bills by claiming mortgage interest as a tax-deductible expense, but not anymore. For investment properties purchased after March 27, interest payment deductions have been scrapped. For properties purchased before that date, interest deductibility will be phased out over the next 4 years. The other major tax change was the extension of the Bright Line test from 5 years out to 10 years. Investors now have to hold on to their properties for at least 10 years, or pay income tax on any capital gains made on the sale of their property. So along with the return of the loan-to-value ratio restrictions, these new changes ultimately raise the hurdle for property investors. Now, there's speculation that rents will rise as an unintended consequence of these new changes, with landlords trying to pass on these extra costs and recoup losses. But we're skeptical as to how much influence these new changes will have on rents. First of all, if that were true, then rents should have fallen last year as interest rates fell to record lows. But that didn't happen. You see, rents are more closely correlated with income growth. And if you look at how rents have tracked over time against how income has tracked over time, that correlation is clear. Now, some landlords may try raise rents where they can, but ultimately any rent hike is constrained by how much a tenant can pay. And an empty rental is far more costly to a landlord than the inability to deduct interest payments. So that's it for the weekly wrap. I'll talk to you in the next one.